Alrighty, folks, we have a treat for you today. We have the one and only Melody Wright back on the channel. We talk about every 6 months or so. She helps me understand what is going on behind the scenes. She has experience and access to data that I simply don't have. And I often find myself learning something from these great conversations. Melody, welcome back.
Thank you, Michael. Thank you for having me.
Absolutely. Why don't you, just in case people don't know who you are, kind of just give your quick resume and rundown. Who is Melody Wright? Why are you uniquely experienced in this world, and you have a unique set of or lens on the economy and real estate?
Yeah, so I fell into mortgage in 2006 at the exactly wrong time or right time, however you want to look at it. And so, this is something you and I share, Michael, this, the history of the great financial crisis. I got a crash course in all things mortgage. No one ever, grows up saying, I want to be in mortgage. You just kind of
No.
land there by accident.
Yeah.
And I'm kind of like a jack of all trades. I go and I learn something. I try to become an expert on it, and then I move on and do it. So anyway, I was just there for the crisis, and it was crazy. And I know people think that 2008, that's what they think of. Well, in reality, it was 2007. It was the end of 2006. It was 2007, 8, 9, 10, 11, 12, 13, 14. Some would argue probably around 2015, things kind of started normalizing. But so that is my background. And my company ultimately went into bankruptcy. I learned a ton. Then I went off to several smaller companies to try to implement Dodd-Frank and all of the changes that were required after what happened. What I realized though is not much had really actually changed, even though everyone in the industry would do the credit quality gospel singing and talking about how things have become so strict. And I think initially they were, the banks definitely pulled back. But the non-banks got in, and they got in with holding the hand of government. For most folks don't realize this, but 85% of mortgages out there are backed by, a government agency or a government sponsored enterprise like Fannie Mae or Freddie Mac. And so what they did is they had these automated underwriting tools, and they just they say approve, approve, approve. So as much as people wanted to talk about credit quality being so much better, and I think initially it was because the banks pulled back, the government and the non-banks partnered, and they have done it yet again through FHA. So not private. It's not private people giving out subprime loans. We now have the government giving out non-prime loans. And then you still have a private market for non-traditionals. So anyway, that's my background. And then what happened is, as I was at a fintech company, one of my presidents said, "Hey, I need to understand, when are rates going to rise?" And I kind of went and started learning macro. I had kind of learned, been in that space when I was in grad school. But I really got reacquainted and just started studying all of these factors, the bond market, how money flows, things like that, so I could understand when that was going to happen. And as part of that, I joined X Twitter, and just started hearing what other people were saying about the housing market. And I realized they weren't getting it. Like they just didn't have all the pieces. They would have one piece, but not all of it. So I went and I got on the road because when people started talking about this inventory shortage, I was like, what are you talking about? And because I think people look at things in aggregate, and you have to get local. And I track over 80 markets. But I went on the road, and I, tried to prove to everyone there in many places, there was no inventory shortage, maybe a misallocation of inventory and maybe unaffordable, but there was plenty of housing stock. So that's a little bit about me. That's how I got here. That's how I got on your show.
No, yeah. And I love it. I love having these conversations, because if folks don't realize, we don't always agree, and it's respectful conversation, right? When we look at the data and the forecast, again, I always learn something, because you have experience that I simply don't have, right? We both went through the fire of that crisis. You were far more in it, right, in the weeds, looking at these and having conversations with homeowners, and seeing what banks would and wouldn't do, or lending institutions. Right. So I really respected these conversations. So let's revisit what I recall from, let's call it January of 2024.
Mhm.
The last time we spoke might have been February, but you were kind of looking at the tea leaves going, 2024 is not going to be great. I think you were calling for, let's call it down five. These
Mhm.
are national numbers,
Right.
but you were really, even then you were pretty adamant that 2025, and I think I even put it in the title, was going to be a bloodbath.
Yes.
Down double digits. I think
Yes.
10% was the swag. We're here. It's 2025 is like 3 weeks away.
That's right.
So I think it's fair to say that we're going to be basically flat for 2024. We didn't get the at least national number down. Is that reasonable?
I don't think that's going to be true, Michael.
Oh
I
wow.
think,
Okay.
yeah, I think when the revisions are in, especially Case Shiller, I don't know if you know this about Case Shiller, but they literally revise the entire thing every time they publish it. It's
Oh God.
because they use data, like recorded data, and
Okay.
so and I think you know as well, it's a 3-month moving
Oh
average.
yeah.
It's
Yeah.
delayed.
Really
So I
delayed.
think
Yeah.
once the revisions come in, and I
Okay.
think even from NAR, we've already seen, like, so let's take new home prices.
Sure.
And so I think you have to talk about what I've come to learn over the year as well, Michael, is I know far too much about all of these series and how they're developed, and I'm so sick of them, to be honest, because what most people don't understand right now is because of who is transacting, it's those
Exactly.
that can afford it. The median looks much higher than than what. So what I would say to everybody is, can you sell your house for it?
Mhm.
Just is that, can you?
Mm.
Can you sell your house for your estimate? And right now, that is not happening in, I'd say, 95% of the country, right?
Yeah.
Of course, you're always going to have these one-offs, but I'm telling you, even luxury, because people see it. They see
Mhm.
the increased cost for taxes and insurance. And so they're like, even rich people are like, why do I want to carry this albatross around my neck? I mean, you're starting to see some real estate bros say things like, oh man, I'm trading these houses for Bitcoin, because this is just a
Yeah.
nightmare. And we'll talk a little bit about Helene and what that's done to short-term rental in those
Mhm.
7 states that were impacted, and many of those places were high tourism. And so I think when the dust settles, Michael, and we get revisions, because
Mhm.
you saw what they did to new home prices. They whacked the crap out of them,
Yeah.
revised almost 5 years of data, and took out that big high that was, previous high. And so I think when it's all said and done, we'll probably still see about a 5% drop
Okay.
for this year. And in reality, what I've been doing recently, just because I one thing about me, I think Michael, is that I look at a whole bunch of data. I don't look at
Mhm.
just one series, because I'm trying to triangulate and see what's happening. So I've been following median listing price, because to
Mhm.
me, that is truly, when we're in a market that is probably going to be the worst since 1995, when all is said and done.
Mm.
And we've sold less homes than we did, in this past season, than 2007, 8, 9.
Significantly less. Yeah.
It's significant, and our population has increased. And so, that, for people to not understand how frozen the housing market is, it is bad. It's bad.
Mhm.
And it could be as bad as, since 1995. We'll see when the year ends.
Mhm.
So little transactions are happening. So I don't think there is true price discovery. And so right now, median list and price came in month over month in October. So from September to October, it barely budged. And I was just like, okay, maybe I am a crazy person. And I mean, I ask myself every day, Michael, are you a crazy person? I mean, I do. Because I want to know, what am I missing? What am I
Right.
missing? What am I missing? But just so this is how funny it was. It was 425,000 in September.
Okay.
In October, it was 424,950. Okay. And I was just, and when that came, I was just like, all right, maybe I am a crazy person, but I'm sticking with it. But let me
Yeah.
tell you what it is right now. From October, November, it's 416,880.
Okay. So 4 6,
So
call it 417, just a round
yeah,
number. Okay.
exactly.
Okay.
Okay, so and if we get to January, so January home prices for last year were
Mhm.
409,500.
Okay.
And in February was 415,500, right? So
Rep.
And it will look year over year. And I think once the revisions are in, once it's all said and done, we will have seen a price drop. Will it be 5%? Maybe not, but
Yeah.
between 3 to
Yeah.
5%.
Yeah, I thought your 2024 call was basically I was kind of slightly up and you were slightly down.
Yeah.
But again, I think I want to really get into 2025 because you were shining a light on that way back when, and we're here. But I do want to hit a couple of things that I've been harping on for quite a while. And the first one you hit was, median home price. I highlighted this 2 years ago that median home price was going to artificially look better than it was because the way median is calculated, it's the freaking number in the middle. Boy, was I crucified by folks that I'll call the crash bros and their legion of fans. And I'm guys, line up the numbers, line them up. And if you don't transact the bottom and you transact here, even if it's less, the number goes up. I don't understand why you guys are.
I don't know. It's just math. I mean, I don't understand. It's just math. Yeah.
Yeah. So again, that's one of the reasons years ago I said the median home price is going to go up. But I've said for a long time the housing market is freaking broken. The Fed broke the housing market.
It's broken.
And the other thing I called is we were going to do sub 4 million transactions because the market is broken. We won't have a housing market, a healthy housing market, until the move up buyer chooses and can't, both, right? Economics demands this crazy thing. It's a two-step function, desire and ability, right? You got to have both to be considered demand. And the housing market's going to be broken for years, in my opinion. The other thing I will say about 2025 is I actually think it's going to be worse than 2024 on a transaction basis.
Jesus.
Yeah. And again, I have history. So you, I'm a data nerd and I went back and studied the last time the Fed ripped the housing market or ripped interest rates high. And it took 4 years to get to the transactional bottom, which was 1978 to 1981. Just for reference sake, we did 4 million transactions in 1978. Folks, it's 2024 and we might do 4 million transactions. Just think about how big that's crazy, right? It's 46 freaking years.
Yeah.
Right? The market's broken and it will be probably the worst on record. But where I'm going with this, in 1978, we did just shy of 4 million. 1981, sub 2 million. It took 4 years to get to the bottom. So the reason I'm bringing this up is that's why I think 2025 will be worse than 2024 from a transaction perspective. And again, if the housing market stays as broken as I expect, we still could get wonky median home prices because, to your point, the low end is the first time home buyers not transacting. So it's going to produce a distorted number. Right. But at the end of the day, when I look at the reports, it's going to say median home price up 2 or 3%. But that doesn't mean that market's healthy. In fact, I would tell you it's unhealthy. So yeah, I think 2025 is going to be worse than 2024 from a transaction perspective. And then when I look at price, because the market is broken, it's going to artificially look like it's up 2 or 3%. That's kind of what I look at it. You have a lot more data underneath the covers. So I'm curious about your blood path call in 2025. Are you still seeing that? Did it go to 26? What are you thinking?
I'm still seeing it, Michael. And could it? So I think you have a fair point. I mean, I really do think that's a fair point. I think that the difference in our views is probably how much I have seen of the speculation.
Yes.
And how the music is stopping and how, the Fed recently put out a report that over almost 27% of refinance applications were rejected. What does that mean?
Now, is that a good thing? Is that a good thing or a bad thing?
For me, it's a good thing because they don't need that credit and it's not going to help them. It's not going to help. It's not going to help. And so I think, that's running dry and we know Burr, right? We know what's happened. We know how they've stayed alive through leverage, through refinancing over and over again. Well, that is drying up. And so here's the biggest difference, I think, is my understanding of inventory. And we tiny pulled back, but seasonally, as you know, that we should be pulling way back, right?
Way back, yes.
Way back. And so the distress, so we've had in many markets, we've had what I've called motivated selling already. Motivated
Okay.
meaning, eh, maybe,
Yeah.
I need to get out of this. Maybe, I got my tax bill. This is, I don't know about
Insurance.
this
Yeah.
anymore.
Yeah.
Maybe I had 10 properties and now I'm going to sell one.
Mm.
And so that's motivated. And we've also, I believe, had motivated foreign selling in places like California and Florida. And that's why California has had some interesting sales numbers. And so I think that a lot of things are coming to a head at once, including that kind of backing out of the foreign buyer and
Mm.
a lot of these higher price areas. And so I think that there's a massive misunderstanding of how much speculation happened and how many people got into this space and got
Yeah.
in at the exact wrong time. And so I think we're going to move from motivated selling to distress selling, and
Mm.
we're starting to see delinquency tick up. And when you look at Q3 2006, whatever delinquency schedule you look at, we were exactly here, and we
Mm.
know what happened from there. And so I'm seeing the FHA has been quietly just imploding under, but there it sits underneath the giant Fannie and Freddie. And so
Mm.
people have just not seen it as well. The agencies sell non-performing loans and they sell them out to the private market. And so we don't have a true picture of delinquency. It's
Mm.
not as low as people think. But it is still low, but it is increasing. It's increasing, and you're seeing it too in these Helene impacted area, and including actually Texas with Beryl.
Mm.
All of these huge impact from these hurricanes this season. Delinquency is climbing higher and quickly, and so I believe we're about to see that accelerate. We're also seeing layoffs accelerate. We're seeing unemployment, massive revisions to that. So I think what's unfortunately happened is that a lot of the data that we've gotten out there has just been wrong.
Mm.
And I think in 5 years, people are gonna look back and be like, "Holy cow," nobody really knew what was happening because the data, and there's a whole bunch of reasons for that, and I'm not saying that anyone's doing that on purpose, but the data is wrong. And so
Mm.
that's when you have to rely on your eyes, which is I did. I've driven over 10,000 miles across this country looking at the housing stock, and when I tell you that there is so much more out there than any schedule
Mm.
says, so what's going to happen, Michael, as well, let's talk about new homes. The builders just had one of their worst months. I mean, 45,000 transactions circling the end of the year with
Yeah.
all of that inventory, that they're about to go into panic mode
Mm.
because there's no, they pivoted to affordable housing last year. And they've got their hands out already. I mean, you've seen the president of Lennar out there, already talking about, the government needs to make it easier for us to build, and
Yeah.
so they're going to get,
Deregulation. Yeah. Yep.
yeah, they're going to get something. They're going to get something, but they've got to move that product, and
Mhm.
it's about to come. And so we're already seeing it. But I think that's also it's been a real disservice what the media has done, and being not really diving into this story.
Mm.
So anyway, I do think 2025 will be a bloodbath, but of course, who knows? We could have another bank failure and another BTFP, and all kinds of things could happen. But when
Right.
I look at the math, when I look at the supply and I look at the demand, and then I put in the middle of that the distress.
Mm.
I think the distress, whether we have foreclosures or not, because we didn't back then either, guys. Everybody misunderstands that. Like, yes, foreclosures went up, but so many people actually didn't go to foreclosure. They did, and there are still people being processed since 2008, like that, because
Wild. Yes.
it's wild because of all the laws changed, and
Yep.
the modifications. They'll just send them to you in the mail now. You don't even
Yep.
have to apply for them. You don't even have to get underwritten for them. So that takes a very long time,
Mhm.
um, to cut, but the distress is there, and there's a lot of people that will walk away just like they did last time, And
Yeah.
that is the marginal seller that's going that does there's not that's coming to market
Yeah.
and it's going to have to get sold. So, I think those are the things. That's why I believe 2025 and just insurance market is just imploding. And,
Mhm.
in North Carolina, they wanted to increase insurance 42% before Helene.
Wow.
Before Helene. Unusual Wells put out a tweet saying, "Oh, after Helene, 42% increase in North Carolina." No, the hearing had just been postponed. We are
Mm.
not even talking about what the increase is gonna be after Helene. That was
Wow.
before Helene. And so it's just owning a home is becoming untenable. With the cost of insurance, the cost of taxes, the cost of repairs. So I think all these forces together is why we're going to see that price drop. But I have to admit, just based on what we just saw over the last year with our eyes, right? What we saw with our eyes is your point, you could be right.
Yeah.
So, but I honestly just feel there's too much supply, for that to be true and too much distress building.
Yeah. So I love the fact that we kind of see it the same way. Where the other thing where we disagree slightly is, I think I'll call it the lending institution, the financial institutions, their behavior has proven to be dramatically different than what you and I experienced in the GFC. What I remember from the GFC is if you got 90 days late, you were over 95% chance going to lose your home.
Right.
In today's environment, what have we learned, right? To your point, they'll freaking send you a modification thing in the mail that you never
Yep.
even asked for.
That's right.
So I see more of the latter than the former in 2025 if we have that kind of distress building, which means, pain is delayed again, right? I just don't see a buildup where we're going to see distressed inventory double or triple, right? We always have some. Even now, we have 1 or 2% of all transactions are called distressed. I don't see it going to 8, 9, 10% of the market in 25. Could it happen after that? Sure. It's just everything seems slower than
Yeah,
what we
well,
saw in the
it
GFC.
is. The one thing I would tell you, Michael, and the only reason I know this is because I still look at client books, is that a lot of people have already gotten these workouts.
Oh
That's
no, for sure.
why
Oh yeah.
that's why the delay. That's why you keep seeing 90-day delinquency go down, except now it's not. It's not anymore. It's going up. Because what's happening is they get them at that 90 days. That's when you have to have them in some type of workout.
Yep.
And that's when they go into the modification or whatever it is. But now what's happening is you've got the dam and you've got distress building up behind the dam and it's coming over. And
Okay.
so I would tell people who, look at just one delinquency schedule, whatever it is, look at the increase in the 90-day delinquency and the 120 and
Okay.
don't look at foreclosures because like to your point, those just are rare.
Yeah.
But there's gonna come a point, and this is what happened last time, and it's what happened in 2012. Because I mean, I was there. It happened. The GSEs, everybody had enough. They could
Yeah.
not take it anymore. They couldn't take the losses anymore. And that's when Wall Street came in and started buying up all the properties.
I remember
And that's what
vividly.
happened. Yeah. I mean, right. And so that was the end of the crisis. That was it. They came in and they bought it all up. And so,
Yep.
they're not going to buy up these properties unless they become affordable. How are they going to become affordable?
Yeah. Yeah.
And
Again,
so, yeah,
it's all there. I mean, I can see the
yeah,
recipe. It's just I can't tie it together in my head given the
I get it.
behavior. Yeah, that sees this in 2025. But again, let's be clear. I'm not calling for a healthy housing market. If
Right.
I'm calling for transactions below 24. The other thing that I think is really interesting is interest rates, right?
Yeah.
I'm on record as saying that I think the 30-year mortgage owner occupied best credit is going to average 7%. I mean, there are some people out there calling for 5.5%. I think they're insane. I think rates are going to be higher than people expect, which is going to lead to affordability problems and lead to less transactions. It's just that's all tied together. Do you have a thought on rates, or you don't really look at that?
Oh God. I mean, I look at the 10-year at least every 5 minutes. So yeah, and I've done all kinds of analysis on the spread and in my Substack. Yeah, no, I look at that and so that's I don't think we're going much lower in the near term, like unless we have some type of event. But I got to be honest, when I think about everybody's like the flight to safety, and I look at the bond market like, why do you think that's safe? Like, I don't. It's not. So I think people are so addicted to the flight to safety idea, they haven't realized that that's not as safe as it used to be. And I think that's what the bond market is actually telling you. It's like, yeah, buddy, no.
Mhm.
So I think that could we go higher from here? I know a lot of people that think we'll go even higher than where we are.
Mm.
I honestly, there's so many factors, and that's why, I think it's kind of silly. I try not to actually talk about forecasts and predictions because you talk about path.
Yeah.
I realize that people want that forecast from me because it just they want it, right?
Yep.
But I think about path, and I think that with, what's happening in China, what's happening in Japan, like, people are fighting for their currency, and when that happens, you're gonna have less buying, of treasuries,
Mhm.
and because the international buyers are big, big, big buyers, and as everybody gets under stress, and I think what's also happened, Michael, that's important is the Fed has lost control of the narrative.
Mm.
And the long end of the curve is saying, "Ha ha, you're funny,"
Exactly.
right?
Yeah, yeah,
Like,
yeah.
and
Cute,
so
cute.
once that happens, and
Yeah,
these confident games, they slowly break and then all at once,
yeah,
right? But
exactly.
people now realize, and Powell said it at the podium, I don't impact mortgage rates.
Yep.
But everyone in the industry, as you know well, thought they did.
Oh,
And
yeah.
so, but anyway, I know that's a long answer, but the idea is that I think that people now realize the Fed doesn't control those. And
Yeah,
I think they've lost the narrative. And so I think that rates are probably going to stay this high.
I agree.
Um, and they probably will not go down much further. And that's going to be a big shock. People are still not accepting it.
No, I agree. And again, my interest rate call and my transaction call again just points to I'm telling real estate agents and mortgage brokers, you got to buckle up, right? You
Yeah.
got one more hard year. Then it'll get interesting. 2026 to me will be interesting because again, if you go back and look at historicals, and again, 78 to 81, 82 on a transaction basis was up 25%, which is a monster move for transactions. Now, some of that is because distress sales went up to this conversation.
My parents lost their home in 1982 to foreclosure. Yes.
Yeah. So it's basically the pressure, the dam, I think was the word you use,
Yep.
builds up, and then you've got to clean the system, purge the system.
Right.
So that's kind of where I'm looking at outgoing 2026 could be interesting for
And I
housing.
think a lot of people I respect, also think it's going to be a little bit farther out.
Yeah.
But I think we all have to remember too how fast it went up this
Yeah.
time, and it
Yeah.
went up really fast. And
Yeah.
and the power of social media, and the power of the Zestimate. And I'm writing a Substack right now with a little clever name that I'm that about the Zestimate
Yeah.
and the wealth effect.
Yeah.
And just once the confidence game breaks,
Yeah.
and it's breaking, and it's breaking in luxury. And I think once it breaks at the top of the K, like really breaks,
Mhm.
then I think we could see an acceleration that is unexpected. But
Hmm.
to your point, we could just keep going along a little bit slower and,
Yeah.
so yeah.
Yeah. Again, I think the other thing it's just wild to think about is the luxury market. I'm on record saying if you're lucky enough to be shopping in the luxury market, get out and write some disrespectful offers. There's going to be
Right.
luxury properties traded for $1 million discounts because
Oh, it's already happening. Yeah.
yeah, this is the time to go shopping. If you happen to be, really rich, go buy that, whatever you want because luxury is going on sale right now. So I do want to switch gears because where I see pain, like real pain, real loss in potentially 25 is not residential as we've discussed, but it's in commercial,
Sure.
specifically class B and class C apartment buildings. We are already seeing transactions in Class A. Class A has already had a 25 to 30% haircut, depending on who you talk to. Class B and Class C simply aren't trading. We haven't had
Right.
any price discovery, to use a word you used earlier, and I agree with entirely. I think that market, when it breaks, it will break fast, and it could go
Mhm.
down 50%
Yeah.
from past transactions. That's where I see a nasty surprise, is in that part of the market.
Yeah, as do I. But I think so my boots on the ground, here's where it also comes in, is that these two things are inextricably linked, because a lot of this inventory that was built that nobody sees, it's not on any listing site. The builders put one card. Even
Yeah.
if you look at the permits, one thing I recently learned through all of what's happening in Helene is the unincorporated areas, some of them you don't need permits, which would
Hmm.
explain what I've seen with my eyes and not what's not in the data. But I think that the it you see like the Raleigh, North Carolina is a great example. Apple said they were creating their headquarters there.
Mhm.
The madness that happened in the outer rings of that city. There's this one little city called Onger, North Carolina, that breaks my heart. It was this old little city. They tore that thing to shreds.
Hmm.
Every single house was a fix and flip, Michael. Every
Wow.
single one. And then they had all the new build. And so it's not just I think we have a misunderstanding of how much fix and flipping is going on out there. And also actually sort of they are wanted to fix and flip, but they ran out of money and that stuff's being stalled. So
Yep.
so I think that people misunderstand how much of the building was actually around commercial real
Mm.
estate projects or the idea or promise of those projects, because Apple has been delayed again till I think to 2026. They're not coming. I mean, come on, people. Like, so it's just, and so many of these projects, they're not coming and the jobs aren't coming. And so that's why I think, yes, definitely we're going to see distress. Why we've already seen all these buildings go to specialty servicing. We haven't seen it yet in bank earnings because they are doing the extend and pretend. They're doing the modification game, just like you do in residential real estate, but now you're getting to double defaults.
Yeah.
Now you're getting to a point where you have to start taking the write downs, and we will start to see it in bank earnings. But so I agree on the commercial side, but I think that it also will tip the residential side as well, which is another reason I think that this could accelerate.
Okay. Yeah, and again, I think it could go down a nasty surprise. It could be down 50%. I think it would take probably 18 to 36 months, because once it starts, it'll just be a tidal wave. It'll be kind of a race to the bottom. Um,
Oh God. And we just need some rationality. Like, that's why I always say I'm bullish bulldozers, because it's time to start bulldozing these things. Like it's just they are threats to safety. I mean, you go to downtown Dallas, I mean, that is just bizarre.
mm,
Gleaming new towers, deserted, vacant, old commercial buildings with strollers and homeless. And I mean, it is just, and you don't see this on the news anywhere. That you don't realize what's happening in these cities because most of our listeners, Michael, just get up and they go to work and they feed
mhm,
their family and they don't,
right.
and if you're not looking for it, you don't see what's happening around you. But yeah, so.
Yeah. Well, let's talk about where you're at. You're in Eastern Tennessee, pretty close to Western North Carolina. Obviously, Helene came through and did some pretty significant damage. What are you seeing on the ground there? Let's highlight what's really going on.
What I'm seeing, Michael, is just a lack of help, and there's no government help, and there's no media coverage, and the damage here is there are no words, there's no drone footage, there's no pictures, there's no words, no way to describe. I've been recently meeting with search and recovery teams, SAR teams. You talk to anyone around here, they'll tell you very clearly that thousands of people are either dead or missing, but
Hmm.
the official numbers are very, very low. And so there is no government support. We need the core here. The only way we're going to get out of this if we have the core. And the other thing is there's no command structure. So what's happening is you have these loose like bands of volunteers, like groups and camps. They're doing their absolute best. They really are. But because there's no central system, a lot of times will happen a lot of wasted time because let's say you hear about somebody needing help at X spot, you then go and another team has showed up there, and so
Mm,
it's a very frustrating situation right now, Michael, but 7 states were impacted, and so I've done an analysis, of all those counties, and I'm looking at the delinquency just skyrocket, and that's another thing that's going and that was 7 states, and when I say that there's not enough media coverage of this, I mean, there's really none, but mountains taken out, like, it is until you see it with your own eyes, Michael, it is just hard to explain. So, that's one I've been focused on that. And Unicoi County is 10 miles from me. That's where they rescued 50 people off the hospital. That's where those people died in the plastics plant. I just filmed right near the plastics plant yesterday. It looks like it did day 3.
mm.
I don't understand it. And so I've been in a lot of disasters or around them, and including 9/11, and I just don't understand what's happening. I really don't, and I don't it just doesn't make sense. So, Western North Carolina, East Tennessee, Virginia, South Carolina, these folks need your help. Georgia, Augusta got crushed. So all these places need, and by the way, a lot of them are just full of short-term rentals, like
Mm.
over 33,000 in Asheville, so that's loss of income, as you know, and only 4% of Americans have flood insurance, and so none of these people have flood insurance. So, anyway, that we're living, and it's been 9 weeks, but it's as if it happened last week, but the rest of the world has no idea what's going on here.
If somebody's watching this and good people watch this and they have hearts to help, do you have a recommendation on where they should go to make donations or anything?
Yeah, so recommendations, giving is very personal, so I wanna give a range of options. Right now, I'm fundraising for a freezer for a SAR team in, near Weaverville. They're out 14 hours a day. These are all volunteers. A wonderful woman named Mindy is feeding them every single night. She needs a freezer because she's getting meat donations and she has nowhere. So you can go to my GoFundMe as well. I
Mhm.
have M3 Melody GoFundMe, and I can send you that link.
Okay.
But there's also Samaritan's Purse if you want to give to a bigger 501c3 where you can write it off. Samaritan's Purse is a really good one. They've done a lot of great work here. Also Coalition for Kids is a local ministry church for kids, and they're working on a fundraiser for over 500 kids to give them Christmas in these surrounding areas. And so that's Coalition for Kids, and I can send those links to you, Michael.
Yeah, I will.
Um,
If you send me anything you send me for the links, I will cut and paste into the show notes. They will
Perfect.
be the only thing in the show notes. Nothing else will be
Okay.
there. So if you want to
Cool. All right.
give folks,
Thank you.
please do. I know lots of people that watch this channel have the means to give a little bit. Whether you're going to help with the freezer, help the kids with Christmas, please do what you can. We need to help fellow Americans who are really going through it right now.
Right.
So let's do that. It's hard to switch gears from that, but we're going to try.
Sorry.
It's okay. I hope people watch and give. So we'll put those in the show notes. I want to talk about the short-term rental. Actually, let's talk about delinquencies first.
Okay.
And again, this is where you have expertise and I don't. Typically, when we have a natural disaster, again, like Katrina or the what was it, Ian that hit Florida, I have to imagine it's not unusual that delinquency skyrockets in those locations. Is that reasonable to think?
Oh, yes, and no. So like somewhere, depending on how much money's floating around, right? Like, yeah, I can tell you, what happened in Fort Myers after Ian. I was there. I spent 2 months down in Florida last year. Um, the investors came in and gobble, gobble, gobble. They
Ah,
gobbled everything up. And as I drove through Fort Myers, you could see a whole bunch of empty lots, beachfront lots with for sale signs. And that's the other thing. So I'm looking at both the delinquency in these places and the inventory. And the
mm,
crazy thing about Asheville, Michael, is before Helene, it was reaching new all-time highs in inventory in the 2 years that I've been tracking it, and
Okay.
it was happening very quickly, and I could tell motivated selling was about to start. And Asheville does not need 3,000 short-term rentals. No, they don't. They got plenty of hotels too. And so, and there, I mean, and by the way, that's just Asheville. If you go 10 miles from Asheville, there's hundreds and hundreds. They're everywhere in this area. And so, if you don't have that investor demand, then that is what kept delinquency lower
Hmm.
after Ian. But we until those prices, and you're seeing it in Florida right now. You are seeing as is selling. You're seeing a lot of as
Oh
is
yeah.
selling.
Mhm.
And so it depends on how much investor demand there is when it comes to will delinquency rise. But I'll tell you, Katrina, it did have a huge impact, and there wasn't a ton of, saving that. I remember very well still having to deal with Katrina and Sandy when I was, managing default, back in 2012, and,
Mm.
Katrina happened in 2005.
Yeah.
So,
Wild.
yeah, I think it depends on the circumstances.
Yeah. Because and the reason I wanted to ask that is I have to imagine, um, financial institutions, they may record somebody down 90 days late, but they're not gonna press the actual foreclosure process. They're not going to send a demand letter because I have to imagine it's like, hey, if you're in some disaster area that gets hit by a category 4 or 5, we're giving you some kind of grace period, or
Yeah,
I don't
it's
know
called the
how it
FEMA
works.
forbearance. No, it's
Okay,
immediate. A FEMA forbearance, immediate.
okay,
You don't, again, you don't have to call in. If you're in a FEMA impacted county, you
mm,
get the FEMA forbearance. The
okay,
problem is so many people lost their small businesses. They lost their income. And so 90 days will not be enough. 6 months. I've seen disaster areas with over a year FEMA forbearance.
okay.
Again, it kicks the can. It does to some degree, but the solution, and a lot of times the solution is just going to be there probably will be a lot of distress selling as well.
Mm. Yeah, because again, I have no experience in this. This is why I love talking to you. The other thing that's going to happen is, I know a lot of people lost their small businesses, lost income, all of that, but I'm going to guess, I could be wrong again. There's also going to be a lot of rebuilding and net new jobs coming. Is that true? Or do these little towns just never come back?
Some of them never come back. And I'll tell you, as I tell you, I wake up every morning. What am I not thinking about? What should I look at?
Right.
I'll tell you it's gonna be muted, and I'll tell
Mm.
you why, because they can't afford to rebuild, and so sure, in some areas where people are wealthier and, then, yeah, you're gonna see that, but I gotta tell you, it's all volunteers, Michael. The Mennonites here are rebuilding. They're building the houses. They're building, I mean, and, there's plenty of lumber here right now, like, you just saw two forest fires in North Carolina. I'm telling you, these places are huge fire risks because you have entire sides of mountains. All of the trees are down,
Mm.
and so it's you just can't fathom the damage. And so people have moved in with family. They've moved in. You can get a hotel around here,
Mm.
but and that that shouldn't really be true at this point. And so, but people had to go with family because they had no, or they had to go to in a tent, or
Mm.
I've been arranging campers for people. I mean, so I think, sure, is there going to be a bump from the rebuild, especially in places like Florida? Absolutely, sure. But I don't think it's going to be what everybody is expecting because
Mm.
some towns aren't coming back and the government doesn't want them to come back. And I mean, that's just true. Like
Mm.
they're saying, this has been rezoned. This is now a floodplain. You cannot build here anymore. And so a lot of those towns just won't come back. But where it does come, this is a huge wound. I think they're still on a boil of water in Asheville. They might recently have just come
Wow.
off of it. But when I was there 2 weeks ago, using bottled water to, wash dishes, take shower, I mean, it was bad. And they don't exactly know, but there that plastics plant, all this damage. There's chemicals in the water, things like that. So tourism is not going to come back for some time. And so, yes, there'll be a bump. It's gonna be muted, though.
Mm. Okay. Okay.
Yeah,
Yeah. No, I'm just trying to process
I know
all this
you're probably
information.
thinking, well, yeah, I know it's
No, no, I certainly I've done a little bit of reading because I knew we were going to be talking today, and I think you're right. There are some, I'll call them towns. I think I don't know where the line is between town and city, but
right.
there's these little small towns. To your point, there are some that aren't coming back. Right? They've been rezoned, no building. I I ask myself, what happens to the real estate
Hmm.
there, even if it wasn't touched by it, but it's now in a no-go zone. Do they get? I'm trying to think to myself, what happens, right? Because
Right.
it goes from, I don't know, I'm going to pick a number, $200,000 house to zero because it's not livable, right? It's not
Right.
whatever, and I'm like, what happens to the mortgage? What happens to the equity? What does the government Is the government on the hook to write those? Is it like eminent domain where they've got to write you a check so you don't, because it's private
They
property.
have some forced buying programs. They have one in Houston right now. I think they
Mhm.
just started one. I'm not exactly sure, but yeah, they have forced buying programs. My suspicion is they write you a check, but there's limits to those
Sure.
checks. And my suspicion, I haven't had this verified. I'm trying to get it verified. Is they probably make you sign some sort of NDA when they give you that check, and you don't get to talk about how much money you're getting.
Yeah, because
So
that would make
yeah,
sense to me. Because again, you're basically taking private property by this rezoning, so there has to be some kind of, and again,
compensation.
compensation. Eminent domain is the only
Hmm.
thing that I'm familiar with.
Yeah.
But again, there will be some, even if it's been trashed, there will be some value that that person gets, so they can move and pick up and do something. So I don't think people are just going to go to zero on that. I don't think.
Some, but around here, life is just different
Yeah.
in
Okay.
Appalachia. It functions very differently, and yes, but I think then a lot of people leave, and
Sure. Oh, no question. Yeah.
so I don't think it's the kind of money you're in a situation you don't get to force the price.
No,
I
no. You
don't
got to
think
take
it's
it.
the kind of
Yeah.
money, right? And if you had a mortgage, I mean, you have to pay that off. I
Yeah.
mean, you have
Absolutely.
to.
Yeah. Yeah.
So, and I don't, yes, of course, there are plenty of people that own their homes outright, but this area is very impoverished, and uh, I don't think those checks are going to make a whole bunch of difference.
Yeah. I don't know the home values in Apple. I mean, I don't. Are they 100? I have no idea what a decent for entry level home costs. What's the price point?
Oh, it's what you're seeing everywhere else. Asheville went insane, and here in Johnson City went insane. And so, I sorry, I have the median price somewhere around here but yeah, it's above 300. It's
Oh,
above
really? Oh,
at
wow.
least,
Okay.
yeah.
Okay.
The
Wow.
only place it's not above 300 in the over 85 cities I now track is Detroit and Cleveland.
Detroit and Cleveland. Okay.
And Rochester, weirdly.
Where? Okay. Wow.
Yeah,
Okay.
they were also promised, some government money on a chip factory, so a lot of people speculated there,
Mm.
and then that just didn't bring what they thought it was gonna bring, so I think that's what we're seeing in Rochester, but there's only a handful of places in the country that's below 250 at this
Wow.
point.
Yeah.
Yeah.
It's wild. So as we kind of wrap up this conversation, if I were to summarize where we disagree a little bit is, I guess it would be the pace of the pain recognition is kind of where we differ on this. I think.
Yeah.
Is that
Sounds
fair?
like it. Oh,
Yeah.
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 Yeah, and believe me, like you say, I always think things should, happen faster than they do. So I mean, I totally acknowledge that, and I acknowledge your point.
Yeah. And again, I think it's really weird because we agree on a lot of stuff. We both think interest rates are going to be roughly where they are today for 2025, which I got to tell you, in my world, I'm the odd duck, right? A lot of people are smoking hopium and they're talking like sub 6. I'm like, are you freaking crazy? How is that going to happen when we have, anyways.
Well,
But I do.
Fannie Mae's on your side, Michael.
Oh,
They
cool.
they agree that,
Nice.
they're probably not going down. Yep.
Yeah. Well, I just want to play this game with you a little bit because I haven't thought about this. So this would be a thought experiment for both of us. Let's just say for some reason 30-year mortgages are 5.5%, say by Valentine's Day, right? So I don't know, whatever that is, 9-10 weeks away. Let's pretend for a moment unemployment is no higher than 4.5%. So we haven't had some kind of drastic, increase. We're not in a recession. No bank failures for whatever reason. Maybe the Fed starts buying mortgages again. That's right. They were the dominant player, and that's the reason we had 3% mortgage. Let's just pretend like that for a minute. Would 5.5% mortgages change your thoughts on the housing market?
It will accelerate price discovery. That is what it will do.
Exactly.
And so it ain't gonna be good for a lot of people if that's what happens, which is what's so ironic about it, right? But I've done the analysis. I've looked at how many mortgages right now are below 5.5, and unless you can get below 4.5, the refinance game ain't coming back. And so you're seeing refinances, of course, because people are so distressed. They have to pay their credit card debt because those interest rates are insane. But we
Yes.
know what happened last time is they paid it off and then they racked it all up again. That's what they
Human
did.
nature.
Human nature.
Yeah.
And so if rates went down to 5.5, I think that just accelerates price discovery. The only way you get a refi boom is if it goes below 4.5, in my opinion. So
yeah, it's funny you bring that up because I actually agree with you here. If we go to 5, there's some number. Back to my earlier point, there's some number where the move-up buyer comes back.
That's right.
That's
right.
And to your point, that's now price discovery.
Right.
So again, how this all unlocks to me is you have to get the move-up buyer re-engaged. They're not engaged at 7. They're not engaged at 6.5. They're not engaged at 6. Some might get engaged at 5.5, maybe at 5. There's some number in this scale where it's the unlock. Transactions skyrocket, and you have price discovery. And people don't get this. Back to our comment about median. You unlock the move-up buyer, you're going to have a hell of a lot more entry-level housing, and median home price will go down.
That's right. That's right. It's just math.
It's math, people.
It's just math. I honestly, I think we saw it. I think we saw it, Michael. I think we saw demand come back. And
a little bit. It's 6-1, right? We saw it.
Yeah. So I think, yes, I agree with you. And it could get ugly, in my opinion, very quickly.
Yeah.
So
you might actually get me to call in. Let's be clear. Certainly if we got below 5, the move-up buyer would be unlocked, and you would likely get a negative number on median home price. It's just math.
Yeah,
it's just
exactly.
Math. But again, I don't think it happens in 25.
Yeah.
Melody thinks there's going to be some pain coming. We'll continue talking every 6 months or so. Where can people follow you?
So where I'm most active is on X Twitter, M3_Melody. I also write a Substack, M3 Melody Substack. I have a YouTube. I've been taking Michael, believe it or not, I've been taking a little bit of a YouTube break. This is the first interview I've done since Adam's interview.
Wow.
And so because of just the impact of all of this has been very difficult. So M3 Melody YouTube. And then I'll send you the link to the GoFundMe as well. Okay.
Whatever you send me, all those, that will be the only thing in the show notes so people can get those. Okay.
Very cool. Okay.
Have a wonderful day. Be well.
Thank you so much, Michael. Thank you.